I've never made any money out of the herd, and the herd is now definitely full of China stories. And I think people are pretty darn confused now between inflation stories, growth stories, COVID, China, Hong Kong, Taiwan, etc. I don't think China is a very timely bet right now, but I think China is a bet is an investment you can't afford to not have in your portfolio. The question is how much of it. And so I like to pick out a few names that I think are going to be there a long time from now, and keep my eye closely on what's happening in Beijing, because it is very important.
Okay, I want to get into those names in just a moment, but first I want to turn to Nadine. You are taking kind of the opposite view on this front. You are more aligned with the herd, so to speak, in your bearishness. You recently shorted FXI, the China index, this week. What kind of informed that opinion, that decision to short the FXI?
Well, Leslie, there's a few things going on. One, let's call it the macro. So the growth of GDP has been decelerating in China. That's a known, but it keeps happening. We don't see that turning around till later this year, call it the end of the fourth quarter, maybe beginning of next year. And the second one is that the reopening momentum has really been threatened. It's, of course, fiscal support is lower than people expect. The cases of the COVID and variants have gone up, which has been a negative, at least from a headline, as John is pointing out here. But third, it's been China's economic slowdown. That has had a huge effect overall globally, but importantly on the Chinese markets. And then the last one really comes down to Chinese credit impulse. It keeps slowing, and we actually don't see the liquidity dynamics improving until late this year. So from a macro perspective, it's really hard, as John said, in the near term to get excited about this. And so it doesn't mean that there aren't great companies there. We've traded a little bit differently, and we can talk about one on the long side that you can benefit from some of this volatility in headlines. But yes, what we see is the technicals on something like the FXI. Even though the short interest is coming up there, it's just been broken down. And so we can't see the macro and the technicals aligning till later.
Okay, well, a long bet from a bear on the region is definitely intriguing. Where do you think investors could feel confident putting their money right now?
Well, we've been long Hong Kong exchanges. So what you have there is, of course, it's their exchange. And so just as they're asking people not to go on our exchanges for IPOs, guess where they want them to go public? They want them to go on the Hong Kong exchange. So there's a great example where you can be invested related to China, but you don't have to be long what everybody else was long a year ago, mainly China tech and some of the bigger companies financially.
Interesting. And John, you said that you found opportunity in a few names. What are those? Where do you see opportunity right now?
Well, some of them, of course, you can't buy here. But the names that are listed here that you can own are some of them are well known. Alibaba is one. I like to own companies where I actually know the people that run the company, and I've met Jack long ago. Alibaba is very cheap. It is going to be there a long time from now. Ma has backed off. What she is doing has little to do with regulation, and it has to do with nationalizing data and wanting to make sure those companies are not too powerful politically and financially. And he's accomplishing that. So I think you're going to see Alibaba do somewhat better. I think the credit impulse story is real, but the PBOC has also lowered reserve requirements, and I think they'll do it again. They do that whenever foreign capital flows slow. So Biden's remarks today are going to slow capital flows into China. I would expect that to trigger another move by the central bank.
Shepard Smith here. Thanks for watching CNBC on YouTube.